Hello, traders. Welcome back. Gonna do a quick market update and a few trade ideas for you guys. Hope you guys had a wonderful Christmas and you're ready to get back into it this week. As we come into the end of December, it's typically a fairly low volume week again, and I think we can expect possible bullish continuation into the end of the year given what the charts are saying, and we'll get into more what I expect to see into the new year, which may not be the same as the end of the year. So, looking at the SPY intermediate term here, we've kind of remained in this range, which is what we talked about. We might not see much movement into Christmas. Now, seeing what happened here, we put in a pretty nice low, red to green low, and we've held above the VWAP from that low all week. So typically what that's telling us is it's, buyers want to pay the fair price here, and it's likely to see more upside into next week. So the odds are definitely there for more upside. We closed the week above the month-to-day VWAP, and you can see as long as we typically hold above that, then the bulls are in control. And obviously it's been very back and forth, but that number remains about 367.50, which we have been talking about the entire month as the bull bear level, and that remains to be the case. So just by looking at SPY, we're probably set for more upside. We can see that the upside is pretty limited here, as far as trend goes, right? We're seeing this bit of like waning on the upside that's barely being able to put in higher highs. And as we look at some of the other indices, we'll see, maybe those higher highs might actually stop within the next few weeks. But I think, as of right now, we can expect that we can continue to grind up, maybe get up to 375, maybe slightly higher. I don't really care about how price acts towards this trend line. It's just the idea that these highs are really waning down, and they're not very, they're not very significant new highs. And so, as we get into the tech here, tech of course looks better. It always looks better. Let's just take a few of these off from the low here, and then this gap, and if we put one here, basically we're flagging above all three. So as long as we're above that 307, 308 area, this is also set to make new highs. But you have another same situation where, okay, maybe it goes up 2-3% potentially, but then we run into where sellers have typically been coming in again. And this is where things start to get a little worrisome, is we look at the transports here, and the transports are usually the first to show weakness. We can see on the way up, we go to a daily, the transports were really, really doing well for the majority of the run up here. And especially recently, they've started to wane down, and they've started to not show as much strength. I'm not sure where the 20-day is here. So yeah, even here we're under the 20-day, whereas SPY and QQQ were not really in that same situation. And so we see that the transports are already kind of starting to lag, especially very recently. They had a much bigger down day. They didn't recover as well as the major indices there. And now they're showing a little bit of weakness. We haven't really given up any major VWAP yet, and so getting back below here about 214 on the IYT would really, if that happens before the SPY or before the Qs, then that can really send us a signal that, hey, we're going to go back and test these lows, and the market's in for a little bit more of a correction. And so when you see this lagging a little bit, it's something to be aware of. The IWM has also been leading, and this, as long as this is leading, you need the IYT and the IWM to both be kind of showing that weakness, And obviously, I think everybody knows that this is very strong. But at some point, it's going to put in some sort of a major top, because that's just how these type of moves go. And while up here, this was really constructive, now this here is not constructive. We don't have that sideways movement. We have this really poor structure down here with all these gaps, right? Gaps, and none of them are getting filled. Right here, they've been getting filled, okay. But now we're at that point where the structure is just really bad. And so there's not that sideways structure. There's not people located at the same price, really. And, if you can go down to a 30, you really see that better. You see that there's just not that structure, and then make a move, structure, make a move. Now it's just up, down, up, down, up, down. And this is not the structure you want to see. And we don't know how high it will get. It's at 200, it's a psych level, but we don't know how high it will get. We have no clue. And so we don't try to call the top. I saw someone on Twitter after this day here, after this down day, that got back below 190 here, right? We came back below 190, and it was after this close. It was on Twitter. Someone said, "I can't believe we won't see the IWM above 90 or 190 for the next 10 to 15 years." And that's just serious, and that's just laughable. You don't try to make opinions like that. You don't say stuff like that. Trading's about finding a setup and playing it, and that was the most hilarious statement I've ever read. So you don't try to do that. But we're aware that this is like ridiculously extended, and we don't know where the top is. But this is not really a time to be like throwing all your risk into longs, especially after the new year, especially with the transports sending us a little bit of a signal. XLF financials, these are a bit more constructive. These look like they could potentially lead the market into this week if this bullish thesis rolls through. They're looking wonderful here. We have a really nice structure. Obviously, this structure here and this structure here, it's terrible. But this recently is showing short-term strength. And so if this market's going to see that upside, I think financials can be a nice leader. These are the front month vols, next 30-day volatility. This is not good. This is not what you want to see. Higher highs, higher lows. We did just put in a lower high. But the important part is that these are being bid while the market's making higher highs. And while this, again, doesn't mean that there has to be a top, it's usually a pretty good signal, especially when other indices like the IYT are already starting to lag. And so this is definitely something to be aware of and keep your eye on. It's not necessarily a bullish look into the next 30 days of trading. The VIX, you can see, it's lagging the front months here. So that's typically what happens. The front months will get a bid. The VIX will still look weak. A lot of people only look at the VIX, and they don't understand that this is not a representation of the short term. And so the short term will typically get bid up, and that's sending you a signal that the VIX is likely going to get bid up at some point. And so, if you're in a lot of longs, these could be insurance. Again, there's no guarantees in the market. Maybe this actually goes lower, but then the front months stay elevated around here, and then into January, into February, March. Likely into January, I think we can see a bit of a correction. But as always, price pays, and we follow price. Semiconductors, we don't want to see these lagging either, and they're lagging a little bit. They're not in a bearish position whatsoever, but they've thrown out a hint here, like, hey, we're lagging a little bit. We're not leading the market, and this is another sector you want to see absolutely leading the market. Important thing here is the market is very made up of financials, the indices, SPY, and so once these and the IWM finally start to show that weakness, that's probably going to be trouble in the short to intermediate term for the market. let's get into some trade ideas. I don't see a ton off my normal watches, but these are the ones that I've come up with at FUV. This is a high short float stock, and it's shown good accumulation patterns. So we have some good high volume on the rally. We get some low volume with some high volume green spikes, and overall very low volume. All the volume spikes are green. And then we get a really nice spike here with high volume, incredibly high volume for the normal amount of volume traded. And then we just wane off. We wane off and we consolidate, and we get another green, and then we wane off, and we get another green. And so this is a volume pattern 101. This is beautiful, and this is what you want to see in a bullish setup. We form a nice range here. After this reversal candle, we start to just consolidate, stay inside of it. And then right here, we're staying in the upper end, and we get the breakout. We get an inside day, and then we get more demand to make a new high. And so when you see, when you get a recapture of the VWAP from a high here, especially on a high short float stock, this means that all the shorts are underwater. And then now we've seen, boom, we make a new high off that VWAP, and now buyers have created demand. Buyers are back in control. This is going to definitely look to squeeze out some shorts. Certainly, if we are bullish this week, this is probably my top setup. Really like it. I think we can most likely go up and test the highs, and maybe make new highs. We'll see. NVAX. This is one also that I've just been watching. It's a little choppy in here, but essentially we just want to see this make a new high. So over both these highs, and so what this had a really nice resting day. I'm gonna take some of these off. We can just take all these off because they're not really being respected. But we finally had some good demand after a long period of consolidation and a really picture-perfect range here. This is what we look for. And I'm not sure the short float on this. Let me check real quick. Short float's 14.26%. That's relatively high. And so that can typically lead to large moves. Be aware this is a bit of a hard stock to trade. It's a little bit difficult, but nevertheless, this is a beautiful 3-bar setup here with a big, nice demand candle, nice imbalance candle off of this VWAP. And really, we just want to see this make a higher high, and I think we're good to go with a stop under this low here at 122. And this looks set to, test this high at a minimum. And I think this definitely, with the high short float, can have potential to come up in this area here. And so, that's what we'll look for on NVAX. Disney's another one we've been watching because of the large power gap here. We had a really nice close, huge gap, and look at these gains that have been holding. It's a really beautiful setup. And if we go over to a 30 here, we can see that there's a pretty important range, right? So we just throw the VWAP from this low on, and we can see that there's kind of an inflection level here. And so that's kind of our bull bear line, and we made a little bit of a higher high here. And so that's what I was looking for. And then now these top levels, you can see we came up here and we held. And then as we opened underneath, that's kind of been the level on the upside that has provided resistance. And so getting over 175, 176, I think Disney can make quite the run up, especially after all this resting on rather low volume. And given this power earnings gap, even though it was not earnings, it's a power gap. And it's showing extreme strength, and buyers have held. You can see from these major lows here, the buyers have held them, and it's a huge sign of strength. And this is also, a very good setup. It's a little bit easier to trade than NVAX, and so I think this is definitely a good one if you're not experienced with high short float stocks. This is a really good one for this week. That's going to be it, guys. Hope these helped, and hope you kill it this week. and finish off the year strong. I look forward to seeing you in 2021. All right. See you later.